Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey, welcome to the Laughing Stock, guys. Hope everybody's having a good day. Sorry getting a little off late, but either way, we're getting started. Yeah, BNED's at lows, so I've just been still adding some positions. I started looking at the options because they're 5 cents, and you know, I don't recommend anybody do options, but to me, the April ones were interesting because we have a known catalyst. So if it doesn't go through, I didn't buy a ton of options, but I mean they're $5 a piece, so they're really cheap. But you have an April catalyst, so they expire April 19th, and we know that we're going to have an answer by April 10th is the latest. So I thought that was a reasonable catalyst to be able to take some options risk, which is rare. I rarely take options, but if I find that there's an actual catalyst, then maybe I'll dabble a little bit. So and when they're this cheap, I mean, oh my gosh, like they're 5 cents. That's crazy to me. Especially because in my mind, nothing has really changed with the thesis. I still think I think bankruptcies, it's obviously fully priced in now. It's down another, I think, 9% by the end of today. So we'll see what comes. I was going through the Seeking Alpha comments. BLCM and Private Investor have been bringing up a ton of great points. Obviously, courage and convictions involved in some of these notes too, and the same guys who are bearish are still pushing they're questioning the thesis and trying to poke holes in it, which is good. I mean, honestly, if you're an investor, you want someone to poke holes in your thesis, so it's good to hear it. Once again, I mean, maybe I'm biased, but I still don't think anything they put forward makes sense to me. You know, I've been talking, and I don't think bankruptcy in any way would benefit the current way the structure of BNED is. So in my mind, it still stands that I don't think bankruptcy would make any sense. There could be an equity dilution. You know, they did mention that. So, you know, there could be a rights offering too, which if there was a rights offering, I would be okay with that. So we'll just kind of have to see how it goes. But I mean, we're getting down to the wire here. I mean, this thing is, you know, it's down to 50 cents a share. And you know, with a known possible catalyst that if they just amend this debt, we have a long runway ahead of us where this company's going to survive and thrive. So, I just think it's. I mean, I guess this is you know, the whole point of being a contrarian, you know, in terms of investing, because it just doesn't make sense to me. You know, I either that, or you know, I've totally misstepped what the teams and what Bank of America, who's the one that owns the debt, I guess I'm totally misstepping what they would want in terms of, you know, they'd rather take something back than the option of extending this a little bit and seeing if they can get all their money back. You know, because I feel like if it went into the future, it wouldn't be in a worse position. Like, it's not going to be that they don't get any of their money. Like, if you hold out till December, why would you rush it now if there's a chance that there's going to be more generation, more debt will be paid off? Like, what's the benefit of going into bankruptcy earlier on if you're you know, either way, it's not like they're going to only make more money as time goes on. Like, that's basically a fact at this point. You know, especially since they even Needham, who is the analyst who initially downgraded them, came out and said that it looks like there won't be any answer on the Department of Education until mid-2025 and possibly 2026 now. So we're talking 2 full years ahead of us, maybe even 2.5 years of more earnings and stuff. And as this continues to expand, we're going to be net positive cash or, you know, earnings by the fall. So I don't know. I think it just doesn't make any sense to me that they would want to go bankrupt. Maybe they would want some form of equity just to kind of like smooth the transaction. That's the only thing I could see them doing, or taking preferred shares, which I'm okay with preferred shares. Honestly, if they even restructure with preferred shares, that's fine with me, because, you know, if it's not debt and you only have to pay out dividends at a certain point, that's fine to me. I actually think that's better. So we'll see. But right now, I still I haven't changed anything. I'm still as bullish as ever, and I continue to buy here. But now my cash is starting to get strapped, and you know, I want to look at some of these other positions and stuff. I do have other positions, obviously, but like there's like a few other plays that I've kind of been looking into, but nothing's really sold on me quite yet. So I haven't really dabbled in too much, you know. But we'll see. I saw Advanced Autos up quite a bit. That was one I had on my watch list. So that was definitely a missed opportunity. I thought that was cheap, and I should have taken the plunge on that one. So that's disappointing. In my mind, I figured that was only a matter of time before Advanced started to get priced back up. So, but there'll be others. But either way, I mean, I don't see anything that quite has the catalyst that BNED has, where if we're right on BNED, this is going to be a multi-bagger as my largest position, which would be that would push this portfolio ahead by years. So, I mean, that's the goal, is this portfolio jumps. So, and if it's a loss, like it'll offset my gains I've had this year so far. So, you know, that part will suck, because, you know, I have had some other good picks this year so far. So, but granted, we're still early in the year. Like, it's crazy to me to think that the portfolio was up so much, you know, 50% in the first few months, and then you know, now I'm kind of risking that on BNED. But in my mind, I'm happy with taking that risk on. So we'll see where it goes from here. See, we got a few viewers in the chat. Cheers, guys. Happy Tuesday. Thanks for joining us. We can go through some of the comments too, because BLCM brings up some great points on once again. He's obviously you know, in terms of understanding a lot of the how bankruptcy goes down, he knows that much better than I do. You know, I don't claim to be this genius investor. You know, obviously we're still younger, newer investors, and I'm always learning. And you really appreciate when you're following an investor who just has really great insight into things. And, you know, when I read like a 10Q or a 10K, I get so much out of it. You know, I understand so much of that, and I'm able to kind of parse through and figure out what of that information matters. And his ability to do it is definitely surpassed me at this point. So I still think it's awesome though, because I will be looking as we go forward to, you know, to continue my goal of learning, you know, and getting better. Everything that you learn keeps making you better. So we'll see, but we can probably go over some of his comments. I got the dash up here. It looks like Australia's killing it. I don't know what's going on there. What's the news in Australia here? We'll bring this over here. I don't know what's going on with Australia. Why is Australian market Up. I honestly don't look at a lot of Australian companies. One of the analysts I follow, Jeremy Raper, he comments a lot on some of the value type firms and stuff from Australia. It's a lot of mining type companies, oil. So I guess some of the mining giants. When is this news from? Is this recent? Yeah, March 19th. So yeah, so I guess the miners are doing well. So he's probably killing it then, because I know he's I always see him on X, you know, pointing out some of the just the mispriced stuff that's down there. So I guess mining's killing it right now. So as you can see, I mean it's up. It's up. It looks like 10% at least on the year, which is good. I don't really know if I have too much I can play on that, but either way, looks like a bunch of other stuff's not moving too much. What else is going on here? Anything? Transocean's slowly climbing back up. Is that doing anything? I know they're one insider bought again. I'd have to look at where. Maybe I should pull up rig. I haven't looked at rig in a second. I'm just curious what my valuation calculator gives me for rig, because I haven't looked at them in a little while. But I think it was maybe two years ago, I think, that I was in rig so much, or last year. When was this big spike? I guess it was this. Was it this last summer? I kind of forget. Yeah, I still have them at $8. So what were they doing with it? Because the big thing always with them was them paying on the debt, because they were pretty highly levered. So they really haven't taken on too much more debt. There is increasing. They have been diluting shareholders, though. I don't like that. Even though mine literally recommends that they dilute equity holders. But that's just because to even out your debt to equity ratio is basically what that's doing. Cash flows are dropping quite a bit this year, which I don't know if that's just due to oil or what, but let me see if there's any recent article on here. And I will get to I will go back into BNED. I just checking in on this. I think this was the last time I looked. So I guess it wasn't that long ago, because I swear I saw this article by Henrik saying the outlook is bad. Yeah, that was always the big thing with or not BNED, with rig is the contracts. It was just seeing what their you know, what the demand was for them, because they basically, you know, have the rigs out for so long. Invest 5 Life has now 100% leveraged short. Someone could take that money too if they just drop like $1 million, and they can steal all this guy's money real quick. Well, even though it's been down, it's spiking back up. I don't know if that's just from the insider or what. EPS of -9 cents, beats by 15 cents. Okay, so they did beat. But it's funny that came out, and then right afterwards, Henrik, that's when he wrote his article saying Yeah, I mean, whatever. All right. Well, who else was it? Baytex. Bitcoin continues to stumble a little bit here. Did it find its peak? Has anybody invested Bitcoin in here? Because it's always crazy to me. I mean, in the grand scheme, it's not really down that much compared to what it was, but we'll see. It looks like there could be a little bit of support there, so maybe if it breaks through that, because honestly, besides technicals, I really don't know what you go off of when Bitcoin's this high. All right. Yeah, I already went through. I've gone through and pulled out my stocks. So this is a mix of stuff from Monday and Tuesday. Although I don't have the daily movies actually from today. This is updated from Monday. I do have the insider buys all the way up, but I didn't really see too much in insider buying lately. I think I pulled in one company. But yeah, just to go back over some of the things with BNED, because some of the still just waiting on them to release the filing. It's actually more comments right now, so we'll see what's new on here. So if you guys haven't read through this last part, so private investor brings up some stuff that he's saying in equity doesn't make sense at these prices because it's so low. Like they're not going to get much if they release equity even at these prices. You know, they're going to end up releasing a ton of shares, and it's not really going to benefit the company. Like at these prices, my fundamental thing is saying that they would have to release 13 what is that 13 billion shares. Is that what that is? Are these millions, right? Because they have 53 million shares outstanding, so this must be 13 or 1.35 billion shares. So obviously that's ridiculous, and that's on cash flow. Like if you went on assets it would be different, but either way it doesn't really matter. My point being is that, you know, the amount of money that they have to generate to get rid of the debt is kind of stupid here. So it's not really a smart option. So this is like what, you know, as we're trying to do now is just to figure out like what are the options. Like, you know, is bankruptcy seriously a consideration? And then if we keep reading through here, he brought up a great point. He brought up that the MBS, which is kind of like one of the it's like the legacy business of selling the textbooks and stuff, that, you know, they could spin that off, and I think he used an EBITDA multiple, because I asked him how much do you think it would go for, and I think he said anywhere from like 20 to 50 million, depending on what the it's net cash, like neutral. It's positive though. I think like 5 million EBITDA per year. So, you know, if you just gave a multiple of 5, yeah, you know, $25 million you could probably sell it for, because someone would find that business useful, like synergy wise. So I could see him selling for that reason. And then, you know, then you get some of these guys that, you know, if leadership and the board had confidence in the possibility, and see, like, this is some of the things that's strange for me. This guy, I don't know how long he's been investing for, but he's like, wouldn't you expect some insider buying of shares at these levels? He's like, my research shows no buying by anyone, and he said no insider buying equals donut. And that's such a dumb comment, because you can't right now, if they're in the middle of this filing, like it would be considered an insider transaction. It's illegal. You can't do that. So, like, for him to say that, like, I don't see anyone buying right now, so I'm not, like, that means bad news to me. They can't buy right now. What are you talking about? You know, and then everybody kind of hops on him and says, like, you're restricted. You can't buy shares. You know, you have knowledge to information the public doesn't. And then there's, like, a bunch of exceptions. But, you know, and then everyone points out, like, see their insider trading policy. Like, the policies, you can't do that. You can't do that. So, just kind of a weird one. BLCM agrees that they'll probably sell MBS to pay off the term loan. So that would be a good thing to get rid of, because I think that's like 30 million, somewhere around there, 25 to 30 million. So if they did sell it, they could probably at least cover the term loan, get rid of that. So that's one big thing of debt that they don't have to deal with, and all the extra covenants that come along, because each one has separate covenants. So you would eliminate those. And then BLCM starts going like deep into this. Like he's talking about, because who was it that someone kind of contacted? They were basically just saying that like well, okay, so this is, I guess, he's bringing up like one of the bearish parts that he sees, and he said, I scoured the filings and found one indication that BNED is contemplating bankruptcy. He said the indication is the lenders wanted a summary of bankruptcy provisions contained in any university contract. He said, like he said further down in the thread, is the lenders recognize a BNED bankruptcy would be nightmarish and value destructive because of litigation arising from the assumption/rejection of 1,400 university contracts. And he said one way around this chaos is to get all 1,400 colleges, universities, and K through 12 bookstores to sign onto a pre-pack, then sign File 11 and sell the whole company under that. But if that were the plan, he said you probably would have seen Rory Wallace jump ship so that you could get out from under BNED's trading policy and exit his BNED position before it went to $0. Because once again, as an insider, you can't sell your shares. So he would drive himself, like he would lose his entire value in the company. And then they go on and him and Private are going back and forth on how that bankruptcy could actually work and if they could be in default. And then Thomas Gandolfo, who's one of the bears, always on here. He's always trying to poke holes in the theory, which is fine. Said, contracts are set aside at the time of bankruptcy proceedings. For example, numerous lease contracts in the event of a retailer filing. Additionally, the court might be convinced that a reorganization would be a good thing for the customers, especially if the bank brings in new equity investors from a fresh and extended debt structure. And then he responds, lease rejection damages are actually capped, and he points out why, which is, like I said, BLCM does his homework, where these guys just kind of spit out things and hope that they catch you on something, but BLCM is not gonna let you trick them. We need another beer. I'm almost out here already. He said the value doesn't come from leases, it comes from the service agreements, which are not capped. And he said, yes, contracts are set aside in bankruptcy, but not without consequence. Moreover, you're missing the point. He's like, I'm not saying the contracts cannot be set aside. I'm saying that it's cost prohibitive to do so. He said there's a big difference. And he said, why wouldn't the school counterparties gladly accept a transfer of the service agreement to a new, better capitalized structure? He's like, this could be part of a pre-pack. I would think they would prefer doing business with a stronger company, which BNED would be post-structuring. He said this might be a pedagogical moment, so I'm going to provide you with a real BNED contract as an example. And he said, according to this, this is between BNED and Bladen, or Bladen, however you say it. Neither party shall assign or transfer any rights or obligations under this agreement in whole or in part without the prior consent of the other party. Any assignment or transfer without such consent shall be deemed void and of no effect. How do the courts treat this clause? They enforce it. In other words, the statute by terms bars a debtor in possession from assuming an executory contract without the non-debtor's consent, where applicable law precludes assignment of the contract to a third party. He's like, no consent from the thousands of university counterparts, well, all of BNED's value no longer exists. And then he said, BNED's independent and public have to imagine the negotiation dynamic is a little different with an Apollo-owned BNED at the helm or a publisher-owned BNED pushing the university professors to use their textbooks exclusively. Now that the universities got comfortable with an independent BNED acting as their middleman, you can't seriously expect them to take a flyer and hope Apollo plays nice with them. So basically he's saying that, if it was to be through someone else that, if they were to get taken over or bought or restructured or whoever it was, that, a textbook company is going to come in there and basically, play ball and provide these things at real discounts, and not be like, no, you have to use our textbooks and, all kinds of things that are going to make it more difficult for schools to basically stay in compliance and whatnot. So I'm still waiting. I still haven't seen anything that really pokes a hole. In my opinion, some people had asked me how I felt about bankruptcy. I said the same thing. I said BNED, in terms of its assets, it doesn't really have like assets in terms of like hard assets. Like it has its textbooks, but like what are you going to sell those for? I mean, when you go to sell inventory, if you had to just dump inventory, it's not really going to do all that much. It'll cover some of the debt, but not much. And all these contracts and the leases are worth nothing essentially in this. So I don't see why bankruptcy would be your choice. I would rather kick the can down the road and let 2 years of positive earnings come through and, start to pay down the debt. Let them pay it down that way. Why wouldn't you could even increase the interest slightly if you wanted, just to make sure that you're getting kind of, paid for it. And you could do it in terms of based on how the earnings are. So I would picture more doing a structure like that, or like I said, preferred shares, possibly a regular equity dilution where they take on it, or warrants even. I could picture warrants that are, kind of outside the money, which would then benefit them to see the company thrive and succeed, So, yeah, I still don't see it. So, I'm either dead wrong along with some of these guys, or the entire market is just missing this opportunity, which wouldn't be the first time I've seen that. So we'll see. I don't know if you guys have anything. I don't know if anybody else in here is invested in BNED or not, but we'll see if check it, see if anyone's actually answered anything on here. This is from Jeff Moore. I just want to read what this says because I didn't actually see this. Strategy will allow us to take big stakes in microcap companies via pipes for high return growth investments or through buying shares from selling shareholders, CEOs, and founders. We will have also have to mandate to execute take private in the right circumstances. To make it really successful, we need to form win-win relationships with the sophisticated and thoughtful microcap investors in the space. We recognize that stealing companies from public investors is a way to be short-term greedy as opposed to being long-term greedy. As such, it would be great to establish relationships with as many of you as possible. We aim to be liquidity and capital providers in a space where both are severely lacking. So that's kind of interesting because he's saying that there's people like this that could come in to kind of inject capital into some of these things when there's like a business turnaround like BNED. That's the market's kind of, no one's stepping up because no one. I don't know. I guess no one's looking down the line. You would think you can look a little bit forward and just see kind of what's happening with the numbers here. I just if you just look at what's happening with earnings and stuff like that, like it just keeps getting better. Like even look at here, like EBITDA for instance here is 221, 125, 47, 21. Like it just keeps getting closer and closer to positive earnings. And we're going to be there. Operating cash flow now is very positive. We still got to figure out what Q4 is going to bring in because the way the structure is from this company is that they don't basically get all the money from the third quarter. Some of it comes in from the fourth quarter just because of the way the school structure ends and the way the payment periods end. So a lot of that money is still going to be funneling in over time, which is another. Someone I think had brought that up at one point, saying that maybe that's part of another reason they're waiting till April. I don't know how much that's going to have an effect on what like a lender is going to want to do. Maybe they do want to see a final number to see what it actually generated. But I mean that would really be pushing time wise. So I wouldn't think that would change much. But we'll see. I mean, I keep checking the SEC website just to see if they've dropped anything, which still just from the 13th, the 8K that they dropped. So, yeah, I don't think there's too much else going on right now in terms of BNED. So it's just continuing to follow it. Hopefully one day I noticed that the stocks moved in the right direction and that we're right. Well, but we'll see. And once again, continue to do your own due diligence. Don't buy on just what we're telling you. You know, do I think it's super cheap right now? Yes. Do I think it's a really binary position and it could totally collapse and or do really well? Yes, as well. So, you know, take that into serious consideration if you choose to invest. But all right, we can go back to the fundamentals here, and we can start going through some of the companies I pulled up recently. I have looked at I think it's TradeGuard Corporation. At some point, it wasn't that long ago, I think I looked at them. And I know this looks ugly here. You know, obviously earnings are really negative right now. Revenue took a huge hit this last year, and the debt's high, and now it's due, and they don't have a lot of cash. So this is probably a similar situation, and this is the other tough thing there. You know, a loss of 106 on earnings. You know, these margins are brutal. So we'll see if there's anything saving it. I do get fair value right now at 625, but if those covenants or if that debt's coming due, I don't know if they tripped something and that's why it's coming due, or if it's due because sorry, it just looked weird when I first pulled this up. Because the problem is they got that for cash. I mean, they could sell off machinery or buildings if this is actually worth anywhere close to, you know, I mean, it has, obviously it's depreciated somewhat. Either that or they're gonna have to restructure. So they have an ABL which is due on June 30th, 2026. So I wonder if they triggered this because they said it would be 125 million. Is anybody talking about these guys? I don't know if anyone's looked at this. What was this supposed to be? Minus $1.04? I hate when they don't tell you. Well, I guess if there's no analyst, maybe there's no analyst following it, so that's why. So this is from the 19th. So he's saying down cycle and all other divisions. So it looks like Flexible Firms was just sold, so now they're just PE firms and aluminum extrusion, which is kind of a weird mix. And paid a special dividend of $200 million, going from a net negative company to $122 million in net debt at the end of 2022. Sold another investment, Kaleo, for $47 million and made a contribution to their unfunded pension plan of $50 million in order to retire their obligations from their balance sheet. After another contribution was able to pass the defined benefit pension plan. So they're saying that the downturn is from COVID still, but starting to be a while since that, so maybe they just lost a lot of business and it's tough to recover that business. Oh, it's films. I'm an idiot, not firms. So it's a overwrap film. It's 20% of sales. There's more levers to pull to increase profitability. The management enacted some measure to adjust the cost structure to current environment. They don't really talk about the debt. How do you not talk about the debt when that's due? So have they restructured? That's all I want to know. I don't want to go finding through here too much. So, okay, the company's failure here. Let me zoom in on this so you guys can actually see what the heck I'm reading here. Oh, where do we go here? All right, the company's failure to successfully transition to the reporting requirements for its assets-based revolving credit facility matures on 2026. On December 27, 2023, the company entered into an ABL facility which provides the company with $180 million senior secured asset-based revolving credit facility that will expire in June 2026. Amended the company's existing $200 million revolving secured credit facility that was cash flow based. Availability under the ABL facility is governed by a borrowing based. So it could change to a weekly cadence if at any time the borrowing availability falls below 10% of the maximum aggregate principal amount. Failure to timely report could result in an event of default. So they're required to borrow cash to fund working capital and capital expenditures. Advances on accounts receivable and inventory are subject to change based on periodic commercial finance examinations, and obviously material adverse effect. Then it looks like the borrowing availability under the ABL facility will be reduced from 180 to 125. So they're gonna have to get their numbers up. I mean, you're down $1.06. I mean, these earnings are brutal. I don't know. I mean, they're still generating some cash in terms of cash flow from operations, but I mean, you gotta really strap down here if you need to get this kind of cash without. I mean, they're gonna have to dilute or something, because I mean, you can't plan on, if your business is running like this and it's cyclical, and you're just saying you're at the bottom of a cycle. You better hope that cycle turns around. I mean, what were their margins before? So the margins have been good, but they've been really ugly since COVID. And cash flow, even at 12%, which now it's at 3%, only generated 5% EBITDA. That was still negative in earnings. So something's got to change here. I don't know if they can do anything to get CapEx down. What's their SG&A costs? They're slowly climbing up too. I mean, actually, historically, they ran that pretty well. They spent a little bit on R&D. So there's not much room to play with there. So this one's looking kind of risky here. But it did get a spike just recently, back up to 5. I wonder what caused the spike. Is that just because Alright, we can zoom back the other way a little bit. Alright, hopefully you can still read that. Let me know if it's like, you know, off in the way that looks, guys. Yeah, I mean, obviously they have some assets they can sell. Yeah, I don't know. It looks like they're probably gonna have to sell that PE division something because this isn't working right now. So, all right, we'll go to the database and update this one for me. Yeah, and since I looked at it, the value for me is dropped again too. So. Oof. Well, there's that now. Due in 2026. They cut the dividend, which I apparently commented on more than once. Also been an impressive dividend, if I keep mentioning it. I'm just hemming and hawing because it's the kind of thing that, like, you know, I like to keep an eye on. So I might put them on deck just because maybe they can turn it around. It looks pretty bleak. I'm gonna leave this at a 2 in terms of my confidence in that. But it's been jumping, so I don't know. Actually, you know what? Let me go to like what's the news on this right now? There's got to be something. Maybe not. So volume was 200,000 or 230. I can't see anything. I can't see why this is doing so well in the short term here. Is this a momentum thing or traders? This is TG here. What does this look like? Someone obviously likes it. Maybe if you just want to look at it from like an asset based, it's just, you know, it can sell things off and that's worth a significant amount of cash if that's what someone's able to figure out. that's one thing I've been doing a lot now. Is like I should say I'm doing it more. Is with some of these companies that are really ugly and they're not generating much. It's really important though just to kind of skim through the assets that they hold, because sometimes they're holding on to something that's like just worth what they need. You know, what was it? BuzzFeed was one, you know, that we had just gone through, and when they sold Complex like that totally changed their structure around. I don't know how much they could get for the PE film business. I don't know what it generates and what it's worth. I'm sure you could calculate a quick number. But nothing here looks good to me. You know, lowering price targets, I mean, that's a little old, but yeah, I don't know. All right. Keep moving on. All right, got Babcock and Wilcox Enterprises. But before I do that, guys, I'm just going to go and grab one more beer real quick. Don't go anywhere. I'll be right back. All right, I'm back. Oh, Value Hunter's in here. How's it going, Value Hunter? He's in BNED as well. Welcome, brother. Join in on the fun as this thing gets looked at to die. I currently have these on my list to look into further of a small position in CURI, but not the others yet. CURI, factual documentary based streaming company, below cash value, 25 million subscribers, just got added to Apple TV devices, moving towards positive cash flow, and started by John Hendricks, who's the creator of Discovery Channel. Recent price increase from $20 a year to $40 a year for subscription, yet to flow through to top line. So I'm curious, Value Hunter. So you're saying the 25 million got adopted or just got added from Apple TV devices, but you would still have to subscribe. It's just that's what a new avenue to subscribe through. And then I would want to know if it went from 20 to 40 a year for subscriptions. Are people subscribing? Will they subscribe at that amount? 40 seems not too crazy. I mean, if you just think about 40 divided by 12 months, it's just shy of just under $4, But yeah, I can pull them up too if you want. Just curiosity stream. Yeah, because I haven't looked at them yet. So, gotcha. Yeah, that's what I thought you were saying. And then med is weight loss management, meals down 90% over the years, good income, dividend, cash flow, solid balance sheet, buybacks, could benefit from any fallout from the struggling Weight Watchers. I've definitely looked at NRDY before, but it's probably been a minute, so I can go. Oh, okay, 25 million subscribers before they got added to Apple TV. I mean, 25 million at $20, that's actually pretty impressive. Yeah, I mean, I can go through them because, like I said, you know, I mean, these are things that I found on my tracker, but I just like to, especially if it's a company I haven't looked at. That's one of my favorite things to find, just stuff I haven't looked at. All right. Yeah, you like to play in the microcap world with me. Yeah, essentially, like, no debt. I would like to see, because so with 25 million subscribers, yeah, they're gonna have to increase the revenue. See, that's my big question too. Is if you go from 20, what'd you say it was, $20? When you go from 20 to 40, how many people stay at that level? That's super important, because as you can see right here, right now, they're burning cash, so they don't have any earnings yet. The business itself isn't even generating cash flow yet. You know, it's still losing about 40 cents. Now, don't get me wrong, it's improving. I mean, we went from minus 260 to minus like $1. Now it's minus 40 cents. So I would assume if this, you know, someone's calculating and say, hey, if we can just double the amount there, we can finally get into positive territory with the numbers. What's management done? So they diluted shareholders in 2021, but have kept it at 53. They haven't really taken any debt on, which is good. I mean, they're a working cash positive as a net, but you know, even net income right now, it still hasn't really improved much. It's actually just kind of stayed stagnant. So whatever they've done to try and fix this problem hasn't worked so far. So that's something that I would want to know. Their, you know, assets have been going down. I mean, they got 40 million in cash. So it depends how quickly they're going to burn through that. And you know, like my calculator here, it calculates it as levered, but it doesn't offer any. It doesn't tell you to issue shares at this price. So the thing here is, did you say they offer a dividend? No, okay, that's med. I was gonna say, I'm like, they should cut their dividend if they do. But I was gonna say, mine doesn't show a dividend, so that's another thing I was checking on. I mean, it's still young, so I can pull it up. Let's see. Well, your boy Edward just put a thing out today. What's the earnings preview? So earnings are coming up March 19th after market close. Wait, is that today? Did they just do this? So EPS estimate of minus 15 cents, which would be a big improvement. An improvement in their revenue estimate. So they're still struggling, though, on the EPS beats. So they have 1,800 programs, like you said, 25 million subscribers. It is true. I mean, that's what I'm saying. You know, like their net to cash, they're cheap. It's pretty rare you see that. Oh, earnings should be tomorrow. Is today not the 19th? I thought today was the 19th. Maybe it's the 18th. I don't even know what day it is anymore, man. I gotta get my shit together here. So clean with the current ratio of 2. And yeah, they just have 4 million operating leases. That's why I figured the debt actually was, because it did show up some debt on my fundamental sheet, but it's like, I mean, that's nothing. It doesn't really matter. Yeah, so I mean, cyclically, it looks like everybody kind of in this area, the streaming service, has kind of been struggling right now. So the problem is that they're small. Don't get me wrong; it's big that they're on Apple. You know, it just saying, it just opens it up, and you know, if they just do a little bit of advertisement on there, maybe they can pick up some subscribers. All right, yeah, so this is another one that this is what I wanted to look at, because the first thing I think when you're this close is, yes, you have the cash on there, and people will argue, like, you know, he's saying that, you know, it's cheap on the fact that this is cheaper than the cash that the company has, but if that cash doesn't come back to shareholders and they burn right through it, it doesn't really mean much in terms of your share price. So he's saying the bull case is that cash burning is decelerating and steps are being taken to move towards positive cash flow. Like you said, they're going to go from 40 to 20. So you've done your homework well. Nice job. Secondly, the company is aggressively cutting cash burn. Management noted the cash expenditures on content was 3.9 million, down 3.5 or 47 compared with a year ago for the quarter. So as the company leveraged its growing content library, relatedly, the company has started adding new content via a bartering exchange. Have you used it? Do you use this? Like in my other thing too is, like, are these documentaries and stuff, like, are these exclusive to CURI, or is it something that, like, you can find elsewhere? And I know you can find anything elsewhere if you really go looking. I'm just saying, you know, for someone who's just like, you know, I want to pay for a service and it just comes to me and it works well, you know, because there's something to say for that. Like, everyone's always like, well, you could just, oh, you are a subscriber. Okay, cool. Because I keep hearing that argument. They're like, oh, well, people just pirate it. And I'm like, yeah, some people, but, like, you can't assume everyone's going to pirate things. Like, that's not how it works. So they're talking about achieving positive adjusted free cash flow objective. Management has identified more than 15 million of additional planned reductions in expenses and cash spending for 2024 compared to 2023. If management delivers on that promise, the company will be cash flow positive sooner rather than later. So he thinks it agree. Yeah, so you know, this is interesting to me. This is kind of in my wheelhouse of things to watch. So I'll add it to my database. You know, obviously it's still a young company. They're trying to grow. They're trying to find their groove, their little niche in the market. I'll be really curious to see, like I said, my two big questions that, like, if I was following this company, you know, and I really wanted to know, you know, how I think it's going to be in terms of a successful investment is, one, how quick is that cash burn? Are they really decelerating it? What are they doing to actually save money? You know, like right here, look at this SG&A margin. I mean, this is insane. 92%. Get that number down. That there's no reason this is 92%. I can't think of one good reason why you're spending that much. It's insane. You know, like, if you look at, like, CapEx, they're basically saying they don't even spend anything on capital expenditures. So where the hell is all this money going? So that needs to be fixed. Unless they just aren't generating much in revenues, and that's why that number seems so high. That could be it. But, and then, like I said, if you go from $20 a subscriber to $40 a subscriber, how many people are going to not pay for that versus continue to pay for it? And obviously, it'd have to be over half to not benefit you. And obviously, you'd probably want it to be, I mean, obviously, the less, the better. So, like, if it was, let's say you lost 20% of subscribers, that would still be, you know, big in terms of what they would generate revenue-wise. Because, like, you know, so you can look here too. So let's say it was 57 million in revenues that they generate from their subscription costs. If if you doubled it, you know, and you got or close to doubled it, you got this 91 million. That's almost net neutral for EBITDA. So still losing per share. It's really this cash flow. This is what they really need to work on, is that cash flow. But and it's down to 42 cents this last year. So between that and getting that, you know, and that's on 57 in revenues. So obviously that can be improved. So this one's going to kind of probably continue to trickle down as they continue to burn cash. But if they can get, you know, this is another one that like you're going to really want to watch the earnings transcript. And just the each time there's a new 10Q, because that's where you're going to see if they can start to actually pivot this company. This company needs a big turnaround at this, and it's still early in their life, but they need it. You know, my calculator is telling me that it's not worth anything right now, which you can't, like, my calculator is going to say that because of the cash flow issue. But that's why I'm saying you have to look into the future. You have to do some prediction work. That's one thing that always drives me nuts. You know, especially as I become a better investor. Like it should be relatively obvious that when you see a number like that, yes, that should warn you that you need to know, okay, well, what is the company going to do to fix that? Because that number right now is a bad number. Like, they got to fix that. So for me, I probably just use book value here, and I'll discount it to that book value. So I'll just use 59 cents for now, which, like I said, this is an arbitrary valuation. It's too young to really get like a true solid valuation on this. So, and then, you know, I always want a relatively large margin of safety here. So we'll say somewhere around 40 cents. All things considered in the current state right here. I'm only going to sign a 2 right now just because I definitely need to see what's going on here. So it's too small. And when I say too small, I don't mean it's too small. I just mean like that's a risk. That's why I put it in here. It's a small company in terms of market cap. It's young. It needs to do a turnaround. It has no earnings yet, so that's a big issue. Is there any big owners for this? That's my other quick question here, is who owns this thing? I don't know why this hasn't been working. I must have to update this that hyperlink, because I keep getting that same thing where it's telling me that. Oh, so Hendricks is what you were saying. So he owns a huge chunk of it. He owns 21 million shares held out of how many? 53. So he owns about, well, it tells me 40%, but okay. Anybody else? Not really. I mean, I'll put that there's an owner. It's good to know. It's good to know. You know, and really, I'm going to say no debt, so that's a big positive in its favor. So, can manage. It's become cash flow positive. Double cost of subs. All right, so that's kind of what I get from that. I don't know if you had anything that you had thought about it that you wanted to add to it, but you know, it seems like, you know, if they're trying to increase you know, numbers using Apple and some of these other devices, you know, making sure that they're, you know, prominent on like Roku and stuff, because that's the other thing too. Like, I hadn't heard of them, so making sure that the name's out there, that's a big part for some of these smaller streamers too, because it's a crowded streaming space. And now that you say it, I feel like I did have a friend or someone tell me that they let me scroll down here, have a service that they get documents or documentaries on. So maybe this is what they were talking about. Maybe it's Curiosity. So and I love documentaries. I could sit there and watch, you know, things all day. If you know, I like to just learn stuff. So you know, I'm a huge nerd. If you haven't noticed, look at what I do. So but yeah, thanks for the ticker. Med. I feel like I looked at Med. I think what I remember is I thought Med was what seemed like a good company, and I think it was just too expensive for me is what the issue was. I don't think it wasn't something I didn't like. It was just that it was expensive. See all the purple and this green here? You don't see that very often for my companies. I do get 51 as fair value here. So, I mean, book value keeps jumping up. They have a ton of cash. This would go in one of my other portfolios because this is what I would consider a good company. EBITDA's down a little bit, earnings and that, but still, I mean, they're net positive. I'm not even sure if this is real debt, what this debt is. Did you say they're doing buybacks? Is that what I saw? And they are paying a dividend too, right? What are the dividend they're paying? $4.95. Is that real? This is really well. Now I'm thinking it's kind of cheap. Because honestly, when did I look at it last? Huh. I should have followed this more closely. That was in February 10th of 2023 was the last time I looked at this. I don't know how I had to have looked at this somewhere. I don't know why this didn't pop up on any of my trackers. Because I would argue with that dividend, you know, currently, you know, this is worth easily $60. 50 bare minimum. I mean, I can just tell you, looking at these numbers alone, this looks good. This looks nice. I mean, don't get me wrong, they're down a little bit. So I guess maybe if in terms of a cycle, because you know they hit 15, kind of during the late part of COVID. Are they doing? No, they're not really acquiring anything. That was just a quick thing I had. And I mean, they're down a little bit, but like not much. I mean, all these numbers are still pretty good. Net cash flow's down a little bit, but that who cares? Still have 84 million sitting on 84 million in cash. Medfast is getting attractive. I kind of agree. Yeah, he's kind of yeah, with what you were saying, the fallout from yeah, this is one thing I agree on. You know, funny to read unsubstantiated comments that weight loss industry is going to die. The weight loss industry will never die. That is always, I mean, unless the American diet like rapidly changes, which, you know, we'll see. But you know, we got a long ways to go. And it's not even just America. I feel like other countries now are starting to follow in America's footsteps, where they're starting to eat a lot of the foods that, you know, are so popular here that are terrible for you. Interesting. I'll end up reading through this whole article here. I just want to get to some of the highlights here, so you guys can see some of that. So they're saying that the medications like Ozempic and all those ones are negative, but like I don't think that's a long-term thing. I think every time one of these medications come out that everyone's like, oh, it's a miracle drug, it fixes everything. Then there's like, they find out in like 5 years that there's all kinds of like really nasty side effects of these things. We'll see. I mean, maybe they found the miracle drugs. But, you know, also too, like, you know, that's a lot of money to be spending. I don't know how long-term supportive that is. All right, so the reason why this is down right now is because of their outlook. And they're saying they might have to increase marketing spending and SG&A costs to kind of offset the fact that, you know, they're struggling a little bit. Yeah, what do you know? $60 share. I think I've gotten my value calculation. I keep tweaking it, but I keep getting kind of where I kind of like it. I agree. I agree. That's what I think it would be worth, is $60 currently. You know, don't get me wrong, that number fluctuates, but what is the Octavia brand? What the hell is that? Oh, it's a meal replacement program? Okay. Oh, this is one of their products. Okay. See, I wonder, because it's saying that, you know, Ozempic and Wegovy and all these ones are shifting it. I'm surprised that it's not like a synergy thing. Like, I don't know, if I was going to lose, I guess most people just don't want to. I like to work out, you know, I enjoy it. I enjoy, you know, I don't do anything crazy, you know, but, you know, I try and work out somewhat, you know, just even if I get like a half hour in every day, that's like what my goal is, which is pretty modest, but you know, I feel like I stay in shape. And, you know, if I was, you know, overweight, I would think that I'd still want to do something to be active and healthy, as well as take one of these drugs. You know, and whatever that means, you know, in terms of like the food that you're eating or whatever program you're on to stay healthy. Oh, so did they drop the dividend? So they did drop the dividend. So that makes me, that I would say my calculator then I would keep it around like $50. I would think it's worth 50. So but I mean, still it's trading at $35. It's not that bad. I'm gonna pull up this transcript. I won't read that on here because I never read transcripts on here just because it's boring. But I'll throw that down there. I'll get to that at some point. You know, even on a technical basis, like, I mean, we're getting oversold right now on this news at $35. 35 seems cheap to me. I would argue that this is like, I would say this is like 50% off. Like this is like buy territory. Yeah, I'm gonna update some things here. I'm gonna throw in the fact that it's somewhat cyclical. It has some competition. I'll update this to, what did I say is like 51 is what I thought, 51.40. Not that it matters. Who cares? 51.40-ish, somewhere in there. But that makes me think, like, you know, if I was looking for a 50% return, around 34 bucks would be that. I'm actually going to add this one to my watch list, so thank you, because I don't do that often. And like I said, because I would consider this like a good company, it's probably not going to go into this portfolio, because my Ranger Dayne portfolio, or our Laughing Stock portfolio, even though Johnny and I use two different portfolios, like he does his own thing, I do mine, we're just kind of in the same realm and we bounce ideas off each other. For like my true, it's more of a value investing portfolio, this would go in that one. And this is even kind of like a crazy discount. I mean, it wouldn't take much things to go right based on these numbers to make me think that this could jump back up. And did someone say they had a lot of debt? Is that what I read? What do you mean they have a lot of debt? They didn't seem like they had a lot of debt. That's accounts payable. They have leasing obligations. That's not debt. In my mind, that's not debt. Not with cash of 94 million. I'm just seeing if there's anything that matters to me. Not really. They have a credit agreement if they need it. They're not even using it, so interesting. All right, and what was the last one that you had recommended? Oh, NRDY. I've definitely looked at NRDY, but it's been a minute, so we can pull them up. Or maybe not. Maybe it's not in my thing. I thought it has been. So as always, you know, they're involved in AI. Connect students, users, parents, guardians, purchases of all tutors, instructors, subject matter, educations, and other professors. Its learning is distinct. It provides learning experiences across numerous subjects in multiple formats. It's basically like a tutor service and classes. And online solutions for institutions. Got a serious amount of insider buying going on here. Maybe that's where I just saw the ticker. Maybe it was under that. Maybe I didn't bite on this one just because the price is high for me. I can tell right away. But the insiders looks great. Is it all Charles? Charles just buying up shares left and right. Well, he must be pretty positive at this price level. 318. So this is another one that looks like it's getting close to cash flow positive, which is huge. You like these no debt companies is what you like. I can tell that because it's so rare. I look at like you half the companies I look at are ugly, and they're usually loaded with debt. Yeah. I mean, yeah. You look at for smart metrics. I get your value approach here. So the earnings and EBITDAs, you know, not that EBITDA matters compared to earnings or whatever, but blah, vice versa. But that's a little concerning. Margins here need to improve. They've been diluting shareholders pretty heavily, though. I mean, you know, for early adopters, you know, that's tough, but that's why I don't purchase IPOs. Yeah, this just looks a little expensive for me right now. I don't think this business model is not as proven. The insider makes me curious to see why. I mean, in the grand scheme of things, you own 20 million shares and you buy 70,000, even though you're buying it consistently down at these prices, which, I mean, he's buying every day. He's trying to tell you something. He's trying to prove a point. When you see a guy like this and he's like, just, telling his guys, buy shares, just buy shares. It's not chump change, but he owns a lot of shares. I mean, when you own 20 million shares and you're buying 75,000, don't get me wrong, that's not nothing, but it doesn't have quite the punch that it would, especially when there's 172 million shares outstanding. Keep pulling up the same page here. So what was year-over-year revenue? So what's going on here with revenues? So up to 193 million, which, like I said, is we're getting close to cash flow positive here. Of all the things, there's so many times where I feel like a company says they're applying AI to like help things, but in terms of teaching or using it as like a tutoring program, that's one area I think AI would actually be like really useful, because if you can get an AI program that interacts with people and it talks to you like a teacher would, I mean, think about it. I mean, it would, not that I want to take jobs away from teachers, and I don't think it would really work. I think it would be a tool that more teachers would use. But I think that about AI almost in general always, is that I think AI is going to become like an excellent tool to use alongside whatever your knowledge is. But I could see it doing well in this in like a tutoring type scale, or just an educational, like with classes and stuff. That's where I can see AI doing actually pretty well. I could see that benefiting students. So in Q3, learning membership subscriptions increased 96%, which is totaling almost 40,000, 164 million in annualized recurring revenue. Average revenue per member per month of approximately $346 at the end of the third quarter is up from $50, more than 3 times the level a year ago. Yeah, its AI tutor chat is available in hundreds of subjects. That's one thing I could see it. Yeah, I don't really care about any of that. He's saying that you could do IRR, reinvestment rates, return on invested capital, but to be honest, a lot of people just don't care about those numbers. I'm not saying they don't matter, but there's a lot of people who just don't care. And they might not really reflect what's happening, because if so many, with IRR calculations and stuff too, you're making so many assumptions, and if you don't have good numbers, like this is a young company, and like they're at an inflection point where they're kind of changing what they're doing and what they're working on, so like those numbers wouldn't matter anyways, whatever you calculated today. Like you're gonna have to assign some multiple of growth for the future, and when you start assigning things like that, then I'm like, okay, what kind of value is this? Like you're just guessing and throwing some multiples at things and saying like, okay, it could be worth this. Like, yeah, So like at that point, like then it doesn't care. It's like how much do you believe in the thesis that it's going to actually grow? Like that part, that's to me what matters. And that's like, don't get me wrong, the numbers matter to me. Like that's always my foundation. But I don't think I looked at the chart yet. I would definitely want to pull back on this because, like I said, if you could get, I would want somewhere in here. Until the numbers improved. I mean, if the numbers start to improve too, then I could justify maybe getting in here. But like I said, I'm just because this cash flow, this isn't high enough for me. I got minus 4 cents a share, minus 8 cents for I doubt they have to spend too much on capital expenditure, but 7 million is what I get here, around there. But it's young, so there's definitely room to grow into. And who knows? Like I said, this is one thing I actually think AI makes a lot of sense for a company like this. All right, so we'll say insiders. It's fast growing. It just kind of needs like a little bit more for me. It's too expensive right now. It's tech. It mentioned the forbidden phrase AI. Low debt. It didn't pay a dividend, right? No. This is going to seem like a really harsh calculation, but I kind of assign this until I get a little bit more confidence. Sometimes I won't even go off this because, like I said, sometimes it's more narrative to me, and that matters more to me. It just depends on the actual story of what's going on. But this has to do a little bit more for me. But thank you, Value Hunter, if you're still in here. I do appreciate you throwing those tickers to me. They are good ones. They're definitely in my wheelhouse of things I like to look at. All right, we had done. I think we had finished that one. Yeah, we were on Babcock. That was the next thing I was pulling up here. But yeah, I mean, Med I threw on my watch list, so that tells you something. It's rare I put something even on there. Babcock and Wilcox Enterprises is a provider of energy and environmental technology and services for the industrial, electrical, utility, municipal, and other customers. It's got 3 different segments. Sustainable power, heat generation, solar, biomass energy, blah, 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 blah. There's emission controls, and then steam generation equipment. So quite a few different little industries essentially that they're in. They are really levered. They do still have some cash. But this year was really ugly. Like we might be looking at a future share dilution here. Yeah, it's another one that's not generating cash from the business. Like this, like you look at like book value, it's all negative. It's telling me to dilute the hell out of this thing just to get functional. I doubt there's too much. What's going on with the insiders? Is that why I pulled this up? Was this an insider thing? Sorry, I don't know why it keeps pulling up all my screens on that side. So we had one buyer who's a 10%er, B. Riley. So let me see if anyone say anything about it. Signs 246 million gas conversion project agreement. Stock climbs. All right, well, that's good. And when I say that's good, that's in the context of the fact that everything else does not look great. Oh, and I just noticed in those comments they said they have preferred. I don't know. They have preferred shares and they have debt. That's a lot over equity. I like to have some margin of safety, and that pushes it down even further. So let's see here. Oh, they don't have a ton of shares, but still. I wonder what those shares actually are going for. BW. Can you look up preferred? Can you buy them? Is that something you can do? Or are they not offered? Whatever. It doesn't matter, but that doesn't make me real happy with this one anyways. What did I say? I said $1.50, and this now it keeps trickling down. I don't know where I got that number because I'm actually saying it's worth, you know. It's interesting around this price, but to me it's also like there's a concern for bankruptcy here. Because I mean they have the cat. Well, yeah, actually before I say it's bankruptcy risk, I mean let me see when this is actually due. So the notes are due in 2026. Both senior notes are due. So they're obviously going to have to refinance that. They have a revolver. Yeah, I don't know. I don't think this is this is a little rough for me. And I'm actually saying my calculator here is getting a little distorted because of how high the share price was at one point. Yeah, I don't know if I see much else going on here. Where was that article I was under? Here, let me close out all that. What is this article from? He said cash is reported at 47 million, because I had higher than that. This is from February. Okay. Yeah, what are their revenues right now? About $1 billion. But even EBIT has been negative. I mean, on a 7-year average, it's pretty low. Granted, this dilutes the heck out of it because of the debt, the way my calculation works, but yeah, I don't know if I see any way out of this. I got a going concern comment now. He's saying they had a BB plus rating. Is that right? Oh my god, I hate Finner's website now. It's so annoying. What does that even mean? Oh my god. I just want... Wouldn't BW be like at the top here? Instead of getting Bob right. That's what I'm talking about. It used to be so much easier to search for bonds. Oh my gosh, it's such a pain now. Whatever. Honestly, I don't even care. You know, whether they're even rated that high or not doesn't really matter because I'm not that confident. Maybe the bondholders are confident they're going to get their money back, but as an equity investor, I am not confident I'm going to get my money back. So I think we're going to call it quits there on this one. All right, another one that I got pretty high. Wow, this is $14 now, huh? So Cardlytics, it's a digital advertising platform. Its owner and partner's digital channel, which includes online, mobile applications, email, and various real-time notifications. Through the Cardlytics platform, marketers can deliver advertising content to customers that allow them to earn rewards, which are refunded with a portion of the fees it collects from marketers. It collects from marketers? It's a weird statement. Portion of the fees it collects from marketers. That must be a typo. What does that even mean? It enables marketers to reach potential customers across its network of financial institutions, partners through their digital banking account. It also operates a customer data platform, namely the Bridge platform, which is product sales, privacy protected manner to perform analytics and targeted loyalty marketing. Okay. Big insider. Oh, it's Sosin. He bought it $13.55, huh? Yeah, because I remember back when he was in Party. I haven't seen him in a while. So he's buying CDX, huh? He bought it $8.86. Good buy in hindsight. All right, well he's a pretty savvy investor here, so that's interesting. definitely going to check out this transcript, so let me throw that down there. All right, so what are people basing these numbers on here? Because what I'm getting is nothing. It doesn't look great from my numbers, but I mean, there's some people with some serious conviction here. So it had a really ugly 2022. So that's painting everything uglier than it probably is. They have they do have a decent amount of debt. They're diluting shareholders. So these all don't look great. No dividend. Revenues are growing pretty quick. Just, on a few-year average, it's almost doubled essentially from 2018. Almost tripled from 2016. Company in a position to bring back customers at an accelerated pace and setting new objectives. The company sees Q1 revenue of 70 million to 73 million versus the consensus of 66. Oh, so they can check your. Now I get it. It's Cardlytics. Look up Austin Swanson. Well, if you mention it, now I got to do that. All right, I'll delve more into that as we go here. But thank you for the tip. So they had an acquisition here. In first quarter of positive adjusted EBITDA, so they're starting to get into an interesting spot here. I mean, obviously this data is worth probably a lot. It's just if they can assign it well enough to actually, benefit. For the long term. So it's definitely bounced back from its lows. Man, this was under $3. Wow. And that was in early 2023, huh? And even from there, it's went up to almost 20 and now back down to 6. And now it's doubled again. Man, this one's really bouncing. Trades and gaps too. What is the volume on this? How many shares outstanding? Not that many, 39 million. Where was I? It's probably when I have 30 things open here, I get lost in what the hell I'm doing. All right, well, I'm intrigued with the idea of the business. So far, nothing's proven yet, so I'll have to delve more and check out the transcript myself. And I'll check out, I'll look into Austin as well and figure out what, you know, obviously what he's saying and where he thinks this is going to go. I saw a quick thing saying he's commenting, you know, similar to something about Charlie Munger talking about 100 baggers. so we'll see. That seems to be his major stock that he talks about, so, which is good. I like to hear it from someone like that who's really involved, and you know, that's like, I feel like how I am with BNED right now. It's like it's just a large part of the portfolio, and you know, I'm very dialed in on what's happening. It's like literally I'm checking the SEC reports, like, you know, every so often and during the day to see if anything pops up. So I'm trying to catch something as soon as possible. And that's really just because, you know, I said, like, if BNED works out, too, it's like whatever this last chunk that I'm going to throw into it, I want to throw it in as quick as I can. Because like I said, at this point, too, the portfolio, this portfolio is getting strapped for cash. So we'll see from there. Let me go to my database and just update this real quick, and maybe I'll probably get through. I'll probably do one more stock, guys, and then I'll probably start to call it a night here. Just because it is getting late in my time here. Then we'll see. Right now it's a little expensive me for what I see, but the insider is interesting. I'm gonna throw it on deck just so I keep an eye on it. And I'll take it from there because, like I said, I want to read through the transcript and stuff to get a better idea what's going on. Typically, that's what I'll do. You know, I'll go through the transcript. I'll see kind of what's going on with the with that, and then if I want to delve in more, I'll start going through previous 10 Qs and kind of see how things have evolved. And then, you know, if I'm really getting crazy too, and it's like a thing where I can look at other companies, I might start to look at their competitors and learn that kind of thing. But it's kind of rare in my style. I know that's typical of value investing, but I find in more deep value investing, which is definitely what this portfolio is. Usually it's a specific company, regardless of what's going on in the other one. You know, not to say that the macro and competitors don't matter, but what's going on specifically in the one company is usually more important. Oh, did I pull this up twice? We don't need to look at these guys again. All right, Talos. Oh, did I not update this? Sorry, let me just refresh this page real quick. All right, so I think I pulled Talos in just because the insider buying was insane right now. And it does look like it's trading kind of cheap to me. I mean, let me just adjust this real quick. But I get, they don't pay a dividend, so I get fair value around 19. So at 13.29, that's nothing. That's not bad. It's kind of been bouncing around. It got all the way down to about 12. Whoops. So what's going on with that insider? That's a lot of shares. Man, I mean, I was going to say look at the timing, but if you're buying that many shares, you are the timing. Out of 124 million shares, so they diluted quite a bit last year. CapEx is eating a lot of their money right now, but that doesn't mean a bad thing necessarily with energy companies, especially if this is exploration. Depreciation's really high. Debt's pretty high. So we'll look and see when that's due. But earnings have been pretty good here. Well, they've been okay. I should say they've been decent. That is a large. It's a lot of shares, though. Another 40 million shares they issued. You know, I mean, mine is saying it's levered, so it's saying to issue shares, so it's not like it's crazy to think that they did do it, but Talos Energy to sell low carbon solutions unit to Total Energies in a $148 million deal from yesterday. And what's going on with the chart here? It's really not up very much on that news. 148 million? When was that news from? Okay, yeah, okay, so it's recent. Ah. Well, all right, new discovery announced in 2023 is expecting to bring first oil in 18 to 24 months. In the view, further information about the reserves found that may be delivered soon could push the stock price up. Keep in mind that more production will most likely mean more net sales growth and free cash flow growth. That is a brilliant recognition there. I mean, it's worth a lot more than I do. So not really much to go off on that article, to be honest. Let's see if anybody owns this. See, and then this link worked, so I guess the link is working fine. I don't know why certain tickers just won't pull up. So Carlos, and then Bain Capital. This is their biggest position. It's 37% of their portfolio. Who else do they own? A lot of ETFs. So they own ETFs, Steel Group, which they're selling off in TALO Energy, huh? Interesting. It's a crazy little. So a lot of energy stuff. And TALO. So, I mean, it has owners. Then what I get, I got like 18 bucks. Almost, well, we could just say 19. So almost right where I think this is worth it. I'm gonna take out low debt because I wouldn't say it's low debt. I'm gonna leave it there. I don't know. I just I feel like I need more or something. I don't know. It just doesn't seem to be enough. Just based on that, like, I mean, you know, them selling things and trying to do the right things is interesting. EPS of -1 misses by 22 cents. That's from February. Still diluting. Just on that alone, it's just such dilution to the shareholders. Like, you know, I'll have to adjust my calculations again to say where I think the share count's going to be here. Should probably be, you know, be further down because it's going to dilute this. I mean, you know, like I said, mine recommends to offer more shares, so it could be that they think it's better for their capital structure to have that level of equity. But, you know, as someone who's looking to buy, you know, you're not buying on that news. Not beforehand, maybe after. All right. Like I said, I think I'm gonna call it good there, guys. Thank you for anybody who's been tuning in. Appreciate you. I appreciate you, Value Hunter, for throwing me the tickers and giving me something to throw on my watch list. You know, the other ones were interesting. You know, CURI's definitely interesting. I'll definitely keep an eye on that one. But so we'll see. I didn't quite see as much with NRDY, just to give you, you know, kind of my take on the 3. And then yeah, I'll try and get through these other ones. I only got a few other tickers that, you know, I was interested from the past few days. And then Redneck Johnny will be on Thursday. He'll do his stream. I believe he's going to be normal time and all that for him. And then on Saturday, we plan on doing our normal stream together. So I'll see you guys on Saturday. Hopefully we'll get some news on BNED. Who knows? I think I saw that there was another comment on there. Where's the last comment here? Was there something new on here? It's late, so probably I'm the only idiot up here. Yeah, this is kind of what I agree with Courage saying, is like at this point too, like, yeah, any of the bears who are, you know, they don't have anything in this, so like, what do they even care? Like, you're sitting here saying like, oh, it's not gonna work out, and like, so if it doesn't work out, that's what you can do, is say like, see, I told you it didn't work out. But they don't have anything involved, so like, who cares what they think? You know, if they really believed it, short the stock. You know, if you really think you're right, you know, if you want to prove that you really mean what you're saying, and you're not just saying that because, you know, you think it's an easy bet just to, you know, say it, prove it, short the shit out of it. It's 50 cents. Good luck. I dare you. Because I wouldn't short it here. That's really risky. Yeah, we'll like that. Quoting Teddy. All right, well, we'll end on that note. You know, who at the best knows the end of triumph, of high achievement, and who at the worst, if he fails, at least fails while daring greatly, so that his place shall never be with those cold and timid souls who never know victory nor defeat. So we'll end on that note. All right, cheers everybody. Hope everybody has a good rest of your week, and like I said, I will see everybody on Saturday. Once again, thanks for everybody who tuned in. Always appreciate you guys. You know, please continue to subscribe. And it's funny, I'm not I'm not a streamer. Like, I really, for you guys who are in here, like, I do appreciate it. It's awesome to talk to you guys and just to keep the conversation going. I really appreciate it, because that's really what interested me in the stream. So thanks a lot, and we'll see you guys on, Redneck Johnny will see you guys on Thursday. All right, guys. Already out of this beer too. Cheers, everybody. Have a good one.